Nona Peltier is on the other side of me in the Auckland studio, and we are looking at quite a lot of business today. First up, a hospital property investor has a big jump in profit.
I know. Go figure how. Well, it turns out hospitals are hot pieces of property.
Right.
Any kind of medical building of
What
some
sort of
kind.
hospitals do they invest in?
Well, you know, any kind of specialist hospital, regular hospitals, any sort of hospital, mostly in Australia, that's where most of the assets are. And they've increased enormously, like $168.5 million in property value asset growth. So that added to their bottom line. Their net profit rose 86%.
What is the name of this company, Nona Peltier? I think it was my job.
You're supposed to remind me.
No, I think it was my job. I think it was my job to say it.
Vital Healthcare Property Trust.
Okay.
Yeah.
So is their profit increase actually just an upwards evaluation of their stock?
Well, a lot of it is, but not all of it. Their net profit rose 86% to $217.6 million. Now, some of that was rental growth, income growth as well. So, you know, it's very good investment for Vital Healthcare. In fact, they're saying that, you know, they raised quite a lot of money last year. They raised like $160 million. Yeah, $160 million. And they bought 7 development properties with that. And they said there's lots of competition, so their margins are squeezed. We've heard that before about companies.
Yes. The ASB, whose margins were so tragically squeezed, their profit was, what, $1 billion?
About, yeah. So anyway, this company is saying, yeah, their yields are under pressure, but they're going for more of these types of properties. They've been in this business for about 30 years. They say they can do it better than their competitors, so they're going to keep on shopping.
Right. Partial takeover offer for New Zealand Oil and Gas, former shareholders in Pike River, which was not something they ever wanted to talk to us about. What's the offer on that, Nona?
Well, now, so New Zealand Oil and Gas have sold quite a few of their assets most recently, and they've got $125 million on their books. That's a lot of cash.
That's a lot of cash.
And this is a company the offer is from a company that's owned by an Australian listed company, and but it's based in Singapore, and it's called Zeta Energy, and they're known for buying assets in undervalued companies. Now, you could argue that New Zealand Oil and Gas is one of those. I mean, their share price closed up 10% today.
At what?
To 68.5 cents. Now, the offer is 72 cents, and they're not even offering for the whole company. They're just looking to buy up to just over 50%, so 50.01%.
Are they going to get that with a 4-cent premium above current market price?
Well, actually, the market price was the day before was 62.5 cents,
okay, right.
so 15% premium.
Okay.
However, still, that's still you know, this is a company that claims they wouldn't be interviewed by us today, but they do say that they're looking to you know, increase the value of New Zealand Oil and Gas. I spoke with an analyst from Hobson Wealth Partners that said, well, if they were really going to do that, why would they just be trying to just take control of the board? Wouldn't they be trying to, like, buy the company? Okay, we'll wait to see what happens with that.
Thank you, Nona. There's been some stats on the Lions tour and how much money injected into the economy, right? So a lot of people spending money in hotels. Were they spending it elsewhere to the extent that had been anticipated?
No, they weren't. So they were staying in hotels, lifted hotels. Guest nights rose from international guest nights 14% in June. So you would have thought, wow, that's a lot. But they weren't spending their money in the bars and the restaurants, that's for sure, because well, unless, of course, they just use cash, because spending using electronic cards, in fact, really fell short last month, rather in July, yeah. They said that the people spent less on fuel. They also spent less on bars and restaurants, which is a bit of a puzzle, because you would have thought the Lions tour. So while that was a bit disappointing for the market, they do expect spending to pick up. However, just because there's more spending doesn't necessarily mean that the cost of things are going up. And so we heard from the Reserve Bank of New Zealand as well today.
Yeah, interest rates exactly as predicted by you and everyone, really.
Same. And not only that, really the Reserve Bank governor, who's going out of his job at the end of September, kind of put the damp down on any expectation of an interest rate rise. And so that saw our New Zealand dollar fall quite a lot in late trading. Just as I was coming down here, the Kiwi was falling. So, you know, it was around 73 cents, and then within a blink of an eye, it was down to 72.7 US cents, 92.4 Australian, and 56.1 pence. And so our top 50 index, though, it closed down just 10 points. So it's just off its record high, but really overall, In Asia and, out of the United States, we're seeing a lot of red, a lot of worry over the geopolitical uncertainty with Korea and the United States. So, yeah.
We're going to talk about exactly that now. Nona Pelletier, thank you.